Rhodes Food Group raised 600 million rand ahead of its listing on the JSE this morning. A company CEO, that's Bruce Henderson, is joining us right here at the desk for more. Bruce, lovely to have you with us today. Perhaps before we start talking about the history of the company, you can let us know, why have you decided to list now?
Yes, thank you very much for having me here this morning. I think that the two questions are intertwined in terms of the history and why we've decided to list now. But we, about 2 years ago, went through a management buyout, and at which time we put quite a significant amount of debt on our balance sheet. And shortly after that MBO, probably a little sooner than we had expected, we had quite a big acquisition opportunity when we bought Bull Brand. It was quite a significant acquisition, and the asset needs ongoing investment in terms of refurbishing the manufacturing operations. And so we weighed up a number of factors, and it just seemed that it would be the right thing for us to do as a business. It's a significant milestone in a very long history, and it's enabled us to raise the 600 million that you've mentioned, which we will use to expand our existing operations. We will pay down some of that expensive debt. And it will really put us in a position with a very strong balance sheet and give us the flexibility to take advantage of any future acquisitions which may come our way.
You've mentioned a couple of times that there's a long history here, so it's obviously a proud history for you. And just give us a bit more of the background, the context for this company, and how big it is in the manufacturing, bottling, containing of food products.
Yeah, we certainly have a long and a history of which we're very proud. The business is over 100 years old. It was started in 1896 by Cecil John Rhodes in the Franschhoek Valley, when he established deciduous orchards in that region, and then at the same time a fruit cannery to take the produce from the growing area. And there's a number of components that make up our business. A really significant part of our history comes from our Swaziland operation, which had been for many years a privately owned business, and those two businesses came together in the late 90s, 1999 in fact, and when we put Swazi Can and the old Rhodes fruit farms together, we called that Rhodes Food Group, which is basically the start of the business in its current form today. And since then we've seen significant organic growth. We've developed, we've diversified. We introduced a fresh foods component to the business. We produce an extensive range of ready meals for Woolworths. So it's been a mixture since then of acquisition and organic growth, and it's been an exciting journey. We as a management team have been in place for a long time, so we've played our role in that development, and so we're very passionate and committed to the business, and we're excited in terms of the prospects going forward, particularly after the listing.
Mm-hmm. Bruce, you're talking about very exciting developments, organic growth, acquisitions. You mentioned Swaziland. Is that where some of your operations currently are at the moment?
Yes, that's right. We have manufacturing operations really around the country. Our manufacturing operations are located either due to source of raw material or proximity to market. In Swaziland, we have an extensive pineapple canning operation. We also do citrus products and jams. And so each of those stem from raw material available in those areas. Swaziland is a significant and a low-cost producer of jam, and sugar is a big input into jam, so that's an advantage for us. Yeah, so we do have a big manufacturing base in Swaziland.
So what are sort of some of the numbers that we have here? Give us an idea of the scale. I mean, now you've had to talk about revenue, profit, what the earnings would be now that you're listed. So what sort of numbers are we talking?
We're a relatively small player in the food sector, which historically has been dominated by 2 or 3 major food producers. So we've really emerged into the midwater as such. So our last full year end was September 2013. Our revenue is approximately 2 billion, and our EBITDA for that period was about 225 million. we continue to see significant organic growth, so that would have come through during the 2014 year.
Market share?
Market share, we've seen good growth, plus the Bull Brand acquisition came late in 2013, so that didn't reflect in the 2013 numbers at all, which will come through in our 2014 numbers. And that's a significant business. It's a business that we're very, very optimistic about, not only for South Africa, but for Sub-Saharan Africa. Canned meat products as a really good source of protein in quite a robust packaging format, is extensively distributed in Sub-Saharan Africa, and that's an opportunity we'll be looking to explore.
Which other markets are you looking to penetrate?
We already have really good market penetration in the neighboring countries, so across from Namibia, Botswana, Zimbabwe, Mozambique, up into Zambia, Malawi, as far north as Kenya. So we'll certainly continue and expand our distribution into those markets, and then as that develops and stabilizes, we'll look at new markets, particularly in West Africa.
Looking at the sector that you're in, you mentioned Woolworths, and one sees these pictures of farmers on the wall in Woolworths, you know, organic, high quality and all that sort of thing. So on the one hand, there's a quality emphasis. On the other hand, you've got input costs, and I'm sure that they rise far faster than you would like. What is the kind of balance that obsesses you most as the CEO, where you've got these pressures, quality on the one hand, competitive market, on the other hand, difficult labour issues in South Africa have been difficult. In the agricultural sector in particular, there have been big inflation on wages.
Yeah, I guess like everything, it's all about a balance, but in our business, quality is extremely prevalent. It is probably the common thread that runs throughout our business. It's part of our brand DNA of all of our brands, of our corporate brand. So, you know, no matter what product we're producing and no matter what LSM group we might be targeting, quality is always the most important factor, and then the other matters need to be balanced.
Bruce, you mentioned Bull Brand, and I'm familiar with that brand. Now, you also talked about other countries that you're looking to penetrate, the likes of Kenya, for example, where they have a very strong brand loyalty. What strategy are you going to be using to penetrate some of these markets where they are so loyal to what they know?
We've been very successful in developing our own Rhodes brand in South Africa and engaging with consumers and looking for specific initiatives that have really resonated with consumers. And so we've seen very good success in establishing and growing brand share. So I think we have the requisite skills to do that. And Bull Brand is a very well-known brand, even within the region. The product, you know, just with the movement of people and product having been moved informally from South Africa, the brand is well recognized in the region. So we just want to formalize that distribution, and there's enormous room for upside.
I think there's room to sponsor rugby again. Blue Bulls, Bull Brand.
Yes.
They used to sponsor the Carlton Cup, which was the Pretoria Club Rugby Championship. I could never understand why Bull Brand gave that up, so we'll talk about that perhaps on another time. Thanks to Bruce Henderson, who is CEO of Rhodes Food Group.